On behalf of all of us at SKP Securities, it is my great pleasure and privilege to welcome you to this financial results conference call with the leadership team at HEG Limited. We have with us Mr. Manish Gulati, Executive Director, along with his colleagues, Mr. Om Prakash Ajmera, Group CFO, and Mr. Gulshan Kumar Sahuja, CFO. We will have the opening remarks from Mr. Gulati, followed by a question and answer session. Over to you, Mr. Gulati, for your opening remarks.
Yes. Thank you. Good afternoon, friends, and welcome to our Q3 FY 2021 phone call. In comparison with the first two quarter results, HEG's third quarter performance was stronger, supported by improving global market conditions, global steel sector growth, rise in steel prices, capacity utilizations, etc. As per the recent data released by World Steel Association, global crude steel production reached 1864 million tons for the calendar year 20, down by 0.9% compared to 2019. Steel production ex-China was down by 7.7%, which is an improvement over previous expectations when COVID started. China's steel production increased by 5.2% compared to 2019, which increased China's share of global crude steel production from 53.3% in 2019 to 56.5% in 2020. China's electric arc furnace steel production growth remains strong in line with the government's push to replace polluting steel capacities and now comprises 12% of their steel production, up from 6% in 2016, and is expected to touch 20% in the next 3-4 years. China's export of steel continued to decline this year also. After declining about 30% in 2017, it continued to decline by another 8% in 2018 and was down 17% in calendar year 20 compared to calendar year 19, helping the rest of the world produce more steel. Now coming to India, as per WSA, Indian crude steel production registered a decline of 10.6% compared to preceding year. India continued to maintain its position as the second largest steel producer in the world after China. Indian steel industry's capacity utilization started to improve from about September-October 20 onwards, along with price increases and boosting profits of steel mills in the last 2 quarters. Steel prices in India and worldwide, as you would know, have shown marked improvements since last 3 to 4 months. The steel mills globally who had increased their electrode inventory due to panic buying in the years of 2017, 18 and a part of 2019 have now liquidated their electrode inventories, and at present most of the mills are working at the normal inventory levels for electrodes. Thus, the increasing level of steel production is translating to increasing demand for electrodes. Going forward, we expect our capacity utilization to be around 80% for the next year and electrode prices to start improving from next quarter onwards, resulting in improving margins for our industry. We had put our expansion from 80,000 tons to 100,000 tons on hold for about 6 months when COVID started, which we have resumed, and we expect to complete the project by end of 2022. I would now hand over the floor to our Group CFO, Shri O.P. Ajmera, and our CFO, Shri Gulshan Sahuja, to take you through the financial numbers. And then together, we'll be very happy to answer any queries you may have. Over to Mr. Sahuja.
Yeah, thank you. Good afternoon, ladies and gentlemen. I will now briefly taking you through the company's operating and financial performance for the quarter under review. The third quarter started on a positive note, revival in demand aided by higher steel production and reduced inventory levels. For the quarter ended December 2020, HEG registered revenue from operations of rupees 319.59 crore as against 322.88 crore in the previous quarter and rupees 393.69 crore in the corresponding quarter of last financial year. EBITDA, including other income, stood at rupees 24.08 crore in Q3 FY21 versus a negative of 25.45 crore in the previous quarter and rupees 32.02 crore in the corresponding quarter of the last financial year. The company reported a net profit of rupees 4.68 crore in Q3 FY21 as against a net loss of 33.91 crore in the previous quarter. The company's capacity utilization stood at 75% in Q3 FY21 as compared to 74% in the previous quarter. The performance was encouraged by the improvement in business activity, which was offset by lower realization as pricing continued to remain under pressure. Only our balance sheet remains robust with a treasury size of about 1,450 crore at the end of December 2020. The company has made a detailed assessment of its liquidity position and the recoverability and carrying value of its assets comprising property, plant and equipment, intangible assets, right of use assets, investments and inventory, and trade receivables. Based on the current indicators of future economic condition, the company expects to recover the carrying amount of these assets. The company is operating its business by optimal utilization of available financial resources and also implemented stringent cost control measures across the organization to conserve cash. The company is a long-term debt-free and having a treasury size of nearly rupees 1,450 crore, yielding an average return of approximately 6.5%. In power segment, during 9 months ended 30th December 2020, the company has utilized its thermal power capacity in order to liquidate its coal inventory, which in turn has provided additional liquidity to the company. Our working capital is in line with the historical cycle with customers and paying us as per the terms. We continue to make payments to our vendors as per our obligation to make sure that they are supported at this hour of need. All statutory dues were being paid on respective due dates, hence there is no liquidity concerns. Now we would like to address any question or queries you may have in your mind. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Sonali from Jefferies India. Please go ahead.
So thank you for the opportunity. So my first question is regarding the demand scenario in terms of both domestic as well as export markets. You did highlight some comments about the demand in your opening scenario, but any further details on that would be helpful, sir.
Okay. So, you see, if our markets are basically rest of the world excluding China, and the good thing is that the capacity utilizations of the rest of the world, we have seen a marked improvement in last 2 quarters, and they have come up in a very good way that the capacity utilizations have increased from a level of, let's say, 55 to 60% to now 70 to 75% globally, if you just exclude China. So that is where our demand is coming from. In India also, I'm sure you have noticed the kind of capacity utilizations they're having now. They're operating almost at 85% capacity as a total, and the prices, it's well known the way the prices are increasing in the last 3-4 months. So that way, the profitability of Indian steel companies is getting a boost. Even global companies are getting a boost. The impact of COVID, which was more predominant earlier, is now lesser felt as the steel production gets back to where it was during the pre-COVID times. So that is the healthy part. And the other thing where the demand is coming from is that the inventories which were excess in the market, and every customer was holding 4 to 6 months of inventory, and also they were having contracts, commitments. So all that has about got over now. So whatever steel production is happening now, it's translating into real demand, which is what we are observing. And our capacity utilization is also going up. And next year, certainly we expect much better capacity utilizations compared to this year.
Understand, sir. So in fact, my question was in the capacity utilization as well. For example, Europe is the main EAF, one of the key EAF producing nations. So is it really back on track like on the pre-COVID levels, especially because 70% of our mix is exports and we are enjoying such good capacity utilizations at 75%? Hence the question, sir.
See, right now, if you still look at European countries and you just compare calendar year 20 with 19, they're still down. What I'm trying to say is that in the last quarter, it's a much improvement over the preceding quarter. So if you look at the main countries like Germany, France, Italy, they're still down compared to that 2019 level, but they have climbed up in the previous quarter. I mean, just to give you a figure, just to put a figure on it, let's say in April to June, the rest of the world made 167 million tons of steel per quarter, I mean April to June. July to September, it climbed up to 189, and October to December, it climbed to 208. So it is just a shade below the level of 210, which was when the COVID started, which was Jan to March. So it is now coming back to that level of quarterly steel production. So there's an improvement, no doubt. But if you add up the year after year and compare year on year, they're still down. But if you compare quarter to a quarter, let's say if I compare October to December quarter of steel production in the rest of the world compared with Jan to March, it's almost there. I mean, they've reached as far as the quarter is concerned.
Right, sir. So my second question is on the electrode pricing trend directionally. Now, in your opening remarks, you did mention that you are expecting the electrode pricing to increase from the next quarter. I believe you were talking about Q1 FY22. So what could be the key drivers which helps you to say envisage this kind of increase, especially given the backdrop that electrode prices have been weakening for the past 2-3 years?
Yeah, true. So that was, if you compare with the boom time when electrode prices shot up to as high as $15,000, definitely they were in excess of $10,000 for a few quarters. So that was a very unique situation. And there was a rapid correction after that, to the extent that you have seen our results, that most of the industry, most of the companies in our industry had to take a big write-downs on inventory. And now they have reached a level where what I was saying, the enabling factors, that steel production is going up, steel companies' profitability is going up, excess electrode inventories are out of the system, and we have to earn margins. I mean, we always have a lag kind of effect with steel industry. So when they go up a quarter later, you will see the electrode prices also start firming up. I mean, today's prices are not remunerable at all. I mean, they have to start firming up now. So whatever that suffering part was there in the last year, so that is, I believe, now behind us. And I mean, the supply chain is lean. There are no excess inventories anywhere. And I'm very hopeful, very confident that prices will start firming up from next quarter onwards.
Right, sir. So when you say the supply chain is lean, you are mentioning for both domestic as well as exports, right?
Yes. More for exports than domestic. Because in India, you still see that our electric arc furnace is still 30%. There's 70% still either a blast furnace-based operation or induction furnace-based operation. I'm talking about more for global. I mean, in India, yes, companies did have inventories more than normal, but they were not of the type that global companies had gathered, because the Indian companies always knew that it's the big electrode companies are there in India. So they didn't buy 6 months worth of electrode to store, but there are companies in the world, in the Middle East, in Southeast Asia, even in US, they bought a lot of electrodes. They thought electrode prices are going up. Okay, let's buy, whatever price. Because for them it was 3 to 4% of the cost. So they overbought. So that overbought thing could have corrected even 2 quarters earlier, but then COVID happened and all these things happened. So even the steel production went down in the COVID times. And by now we have a sense, we can feel that when customers come and ask for us electrodes, we know what kind of deliveries they are talking about. So, and anyway, we are in touch with all the companies. So we know that excess inventory is now flushed out of their system, and they are at normal working inventory levels depending upon where they are situated. If anybody was working with 1 month, is now working with 1 month, not 6 months.
Understand. So what would be the normal inventory cycle, about 2 to 3 months or lower than that?
Depends geographically where you are. Like, for example, a company in Middle East would like to keep 2 months. A company in India would like to keep 15 days, not a month. Very rare you'll see a company who will buy for a month, because they know 2 companies are here. So depending upon country to country, where you are, I mean, a company in Southeast Asia would like to keep a month and a half or something. Depends on the lead times, etc., and their safety stock. So everybody who had that sense that electrodes are becoming short and prices are going up, and most of the companies overbought. So that situation is corrected. So now this is a normal market situation, If there's more steel production, there is going to be more of electrode demand.
Understand, sir. So my next question is on the needle coke pricing trend. I think last quarter also you mentioned that needle coke pricing was weak. Just wanted an update on that aspect, sir. Where are the needle coke prices and how do you foresee them to pan out? I know it's difficult considering simple commodity, but directionally, if you could give us some sense, that would be helpful.
Okay. So let me put it this way, that the whole of the calendar year 20, we had excess of needle coke inventory. So whatever happened in this year, the prices did go down for needle coke, but we didn't get benefited because we were not buying anyway. We just bought a little quantity which was required for a particular grade or particular size. So that's what we bought. Minimal buying we did. So prices did touch a rock bottom in the middle of 2020, and then now when customers like us are back in the market, the needle coke prices are going up. So as I said, we didn't buy much in 2020, but now we are buying. So they have definitely more than the rock bottom they had reached. Please do not ask me to put a number on it because that becomes quite sensitive, competitively sensitive. But they're definitely on their way up, and it's just like we are a lag to steel industry. The needle coke suppliers also lag to us. So I mean, maybe their prices might start firming up.
Okay. Sorry, you mentioned needle coke is at a lag to electrode pricing.
Yeah. For our electrode market, electrode demand. I mean, last year the unique situation was that most of the electrode companies in the world already had enough of coke. So nobody bought their coke. So they tried hard. They brought down the prices just to boost up a little bit of their sales, but nothing much happened. And now, when the steel industry is looking up, more or less all the inventories are out. Not made for us, for sure. For other companies also, we feel. And now we are back in the market to buy needle coke. So then their prices will also start to firm up. That's our guess.
Understand. So my next question is on the capex outlay. You did mention that you are now resuming the capex capacity expansion of 20,000 metric tons, and we expect to commission that in the next 18 to 24 months. So what would be the total outlay, and how much of that would have been spent already?
See, it was 1,200 crores as a total. About 450 is already spent. About 650 odd crores would be spent in 21-22, and the balance would be probably will get spilled over to next year. Depends when our payments become due and for all these equipments to get eventually shipped and LCs charged that way.
Understand. So, but what about the China excess capacity of electrode? Is it also now getting captively utilized, or any sense you could just help us with in terms of, the excess supply glut in China, which had come up about 2-3 years back?
Yeah, that was a pain. Actually, you see the electric arc furnace steel, the projections not go as they had planned. If you remember, or if you were tracking us earlier, they were talking about reaching 20% of their steel production by electric arc furnace route in 2020, and they're not there. I mean, they're still at 110. So no doubt they have come up from a level of 6% to 12, but they're still much short of 20. So had that materialized, they did put up electric arc furnace mills, but still somehow their costing from blast furnaces was still proving to be cheaper. So, but they are definitely on that path. I mean, the year has moved forward. So we were expecting them to be making 200 million tons in 2020, and as they was publicly declaring also, but probably that will take another 3 years to happen. So that will soak in lot of excess electrode demand, excess electrode production happening in China. So, but you see, we have to look at it at the qualitative point of view. That's still in the ultra high power grade segment. We do not really see them as a credible challenge. But in the lower grade, yes, they are. And they, for let's say 25-30% portion of our business, yes, we compete with Chinese. But for the USP, still, we believe that we have an edge, a qualitative edge on that. So whatever excess capacities are there in China, they're more geared for the small sizes or medium range sizes, and we'll be very happy if electric arc furnaces come up soon, that excess production which they are exporting might get consumed within China itself, a large part of it at least.
Understand. So, and just last question, what was the capacity utilization in Q3 FY20? This quarter you mentioned it was 75%, but Q3 FY20, correct me if I'm wrong, was it 50%?
No, Q3 was 75%. That's what we said. And Q1 was a little less than 50 because of that COVID thing. And Q2 was again in 70. Now Q3 75. Q4 again between 75 or even 80. And I can talk about sales utilization also instead of the production based. So that will be Q4 we expect it to be 80. And next full year, we again expect it to be around 80%.
Right. So I was actually checking on last year same quarter, Q3 FY20, sir.
Oh, Q3 FY20 was very less. Actually, it was 50%.
I understand, sir. That's it from my side.
Yeah.
Yeah, it's 50%, sir.
60.
Yeah.
50, 50, 50.
50.
Understand. Sure. Thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Sir, wanted to know what is now the incremental spreads that we earn on electrodes, which is electrode price minus the needle coke?
See, right now it is all mixed up because we have taken that NRV hit also. So we have a certain needle coke in our system, in our WIPs and FG which are valued at a certain price. So once all this inventory is out of the system, maybe from next quarter onwards, we can have a spread between the electrode prices of the day and the needle coke prices of the day. But right now in our system, we still have inventories which were written down at a particular price. So it is difficult to talk about spread today, but we will see in next quarter onwards, then we will not have this inventory issue to talk about.
The inventory issue, as on date, the needle coke price and the graphite electrode price, what spread do they leave for us?
That I would not like to disclose, or not like to put a number on it actually.
Pritesh Chheda, may I request you to mute your line from your side, please?
Okay. And sir, with this 20,000 ton capacity addition, we go to 120,000 as our capacity, right?
No, 100. From
100.
80,000 to 100,000.
And this 80,000 ton, can you operate theoretically at 100% or lesser?
Almost. You see, this is when we calculate this capacity, I mean, product mix plays a big role. Even if you look at others' capacities also, I mean, if you're let's say if you are at 80, probably I would say, sure. I mean, if you have the ideal product mix, sure, it is very much possible. But with an imperfect product mix, the product mix not of your choice, it actually should be around, let's say, 75 or 76,000 tons.
Okay. Thank you very much, sir.
Thank you.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. Sir, in the last month presentation, you had said that globally 20 plants are operating now as compared to 24 2 years back, and there were 4 plants closed down which had a total capacity of 60,000. So can you update now whether those 4 plants have restarted or they are still in a shutdown condition?
No, they are still in shutdown. You see, I think we talked about the two plants in Europe which Showa shut down. One was in Austria, and one was in Meitingen in Germany. So they are permanently shut down. There's no way they would come back up again. because that's a strategic call those companies have taken. Basically, these are age-old plants, and once they are not efficient anyway. So once they are out of the system, normally you wouldn't see those very plants come back. Maybe capacity gets added here and there when the demand picks up. But normally such plants which were made in 1960s or something, once those companies decide to close them down, they usually don't bring them up as such. They would like, if the demand goes up, they would like to add here and there, but this capacity is permanently out of the system.
Okay. So ex-China and Russia, roughly that table showed a capacity of 7,24,000, which stands, and which you're saying currently would be that demand ex-China, Russia, those would be operating at roughly 80% now?
You mean the capacity, their capacity utilization?
Overall industry, I'm saying roughly, or you can give us on a demand. So roughly ex-China, Russia, the capacity was, I think, around 7,24,000 tons. So this 7,24,000 tons would be operating at what, 70, 75, 80, or whatever number you can share.
From that 724, I think you're referring to a table which we had already shown earlier.
Yeah.
So that is now further down with these two latest plant closures. That should be around 650 or something. I can check and revert to you, because that 724 was including the two plants which were shut later.
Okay, because I just had that number which you had shared in the December, so which had a total of 20 plants. I think SDK and GTI both were at 2 lakh tons. Tokai was at 96,000, HEG 80, Graphite India at 85, NCK at 32, and SEC at 27. That's how 7,24,000 was the total. So you're saying over and above that, two more plants have closed down?
Yeah, you have to take another take off about 40 out of this, and also Graphite India's Bangalore plant also shut down.
I think Graphite India was already deducted. Graphite capacity was in that table shown at 85,000, three plants.
See, I have the table in front of me which you are referring to, which is adding to 725. So that 725 did include Bangalore and did include those two plants I'm talking about of Showa Denko's, which was shut down. So I can see that this figure was shared with you last time.
So this 724 is down to, you're saying, around 650?
Yeah.
Okay. So three more plants shut down, four more plants got shut down?
Three, I would say. Two in Europe after last call, and one in Bangalore. Three.
So that's a very big number, sir. So I think that this probably won't come back. So now if I'm trying to look from 2017, which was a comparable number, you're saying that the ex-China Russia is down from 783 to roughly 650.
Yeah.
Okay. So one is that, and now taking into how much does the China send to the world? So which is the number? Has this capacity been shut down and replaced by supplies from China, or China doesn't disturb the global market in a much way except for the Middle East and few countries which they export?
No, China doesn't really matter much for the UHP grade market. Still, the companies in Western world, they still rely on either the Showa Denko's of the world or Graftex or even HEG and others. But China is still not as a significant player in ultra high power grade. I mean, if you ask me to know of any steel company which has given 50% of their business, UHP business, to Chinese, I will not be able to tell you many such people who have actually, if you are doing a trial here and there is one thing, and actually depending upon Chinese for supplying a large portion of their requirement year after year is another thing. So while some trials here and there keep happening, but that's still, I don't think that we have a situation that the big steel groups in the world are relying on China to meet 30, 40, 50% of their ultra high power grade requirement.
So my next question was, again, last time when we discussed, you said needle coke contracts historically, which used to be half-yearly and yearly contracts, now due to extreme volatility, the pricing is more changing into something kind of a monthly contract, though the volume contracts I think still are half yearly and yearly. So can you update that how both on the electrodes and needle coke, how the contracts are happening? First on the electrodes, I believe India has a monthly pricing, so I'm assuming that is more of a monthly contract now. So and that is for domestic and export market both. And similarly, if you can update on needle coke, how the contracts are happening. Though I think you're not sharing the prices, but if you can just update on how the contractual nature of the business heading towards.
Yeah, it's still quarter by quarter. I mean, we are also offering in the market quarter by quarter, and the needle coke people are also offering to us quarter by quarter. Still. So I mean, we'll probably now talk about April to June supplies of needle coke. In markets also, we are at that same level. In global markets particularly, we try talking about, April to June. In India, because we are local suppliers, we decide quite late when all the costs are known, everything is in place. We decide, for example, a decision to offer in India for, let's say, April to June. It doesn't happen before early March, because that time is sufficient to deliver. We know our customers. We keep the electrodes ready for them. I mean, we keep them in the pipeline. So the decisions in India happen quite close to the actual buying, and in exports, because of the lead time, they happen a little earlier. But it's more or less a quarter by quarter. Quarter by quarter we are offering, and quarter by quarter the needle coke people are offering to us.
Sure, this helps a lot. And what would be the latest net cash balance as on December?
Gross treasury we are having 1,450 crore, and the net after working capital borrowing it is 1,250 crore. As on 31st of December 2020.
And my last question would be on your sales mix into UHP and other grades, and a sectoral thing also. Entire sales go to steel sector, or you sell something on the EV also?
No, EV doesn't find any use for graphite electrode as such. Entire sales are going for steel industry. There is a very small market of titanium smelting, magnesium, these silicon, these type of companies, and there also we sell some of the portion, but that is minute. I mean, it wouldn't even amount to 1 to 2% of our sales.
And UHP and lower grade, what would be the rate?
Sorry?
What would be your UHP grade sales in the overall, and lower grade? If that
varies year after year, but generally it stays like 70-30, 75-25, depends. Actually, if there is more demand from the electric arc furnace segment, then UHP sales go up fast. And if there is not subdued demand, then at least the ladle furnace, the small size business, is still more stable, because that also goes to blast furnaces for refining of steel. So that is a little bit of a fluctuation. So you can say, let's say 70 to 80% is normally our UHP grade sales, and 20 to 30% is our non-UHP grade sales.
Thank
this again, as a 3-4 year average, I would say. I mean, every year it varies a little here and there.
Yeah. Thank you, sir. I'm done.
Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead. Saket Kapoor, may I request you to unmute your line from your side and go ahead with your question, please. Due to no response, we move on to the next participant. The next question is from the line of Pratin Roy from B&K Securities. Please go ahead.
Numbers. Hello.
Pratin Roy, your audio is not clear.
Yeah, now it's audible?
Little better, sir.
Yeah. Thank you for the opportunity, sir. Just my first question is that we are going to expand our capacity. So my question is that, see, globally needle coke needle coke availability is on a lower side. So how we can procure that needle coke? Will it be a challenge for us? That is my first question.
Mm-hmm.
Yeah, and the second question is that in 2018 and after that, there is lots of Chinese capacity addition in the graphite electrode side is on hold due to some credit issues as well as the environmental issues. So can you please provide any update on that, whether China will come out in more capacity or something like that? Thank you.
See, China has a large capacity of electrodes. There is no doubt about it. But their more focus is on the high power grade rather than the ultra high power grade. They do make some sizes in the ultra high power grade. Most of it which gets consumed within China. Some little bit of that gets exported, and they keep making trials here and there. But they're still not like a proven supplier to the main steel companies who would, let's say, rely on them to provide them 30 to 50% of their annual requirements. So it's not at that level, but yes, customers sometimes do use this as a tool to us that, Chinese UHP prices is X or Y or Z. But the moment you ask them that, okay, go ahead and place 50% orders on China, then they don't do that.
And in the needle coke side, I have a question that in the capacity expansion part, how we can procure needle coke, and will it be a challenge in the long term because needle coke is a shortage? So if you can throw some light on that.
I forgot to answer that question. You had asked this earlier. No, we do not foresee this as a challenge because there was a time when there was only petroleum-based needle coke available. But now there's also coal tar pitch coke-based needle coke available. Although it's not a perfect substitute, but yes, it is. At least it provides an alternative with which you can make the smaller size in ultra high power grade. But it is still not the exact substitute of the petroleum-based needle coke, but it does help in the demand-supply balance. So the answer to your question is that no, we do not foresee risk of needle coke getting short.
Just one thing just to understand, sir, is the linked question. So if we can't provide the full petroleum-based needle coke, then the quality of the product may not be that superior. So is it a problem to fetch a higher realization, or we should compromise to realization with the coal-based needle coke?
Okay. I will answer this question in this way, that up till a certain size, they are just equal. Beyond a certain size, then petroleum-based needle coke gets a shade better. So by saying that this is an option, it is not a poor substitute, I would say. I mean, till some sizes it works exactly like the petroleum-based needle coke. Exactly. So at least it gives us an option to have some alternate material available.
Okay. Okay, so thank you, sir.
Thank you. Thank you.
The next question is from the line of Devang Sangvi from ICICI Securities. Please go ahead.
Thank you for the opportunity, and good afternoon, sir. Apologies, I joined a bit late. Can you please guide on utilization what we are targeting for next year, and any early trends on the pricing as compared to FY21 for FY22?
Devang, did I hear you clearly? Are you asking about capacity utilizations for next year?
Yes, sir. I joined a bit late.
Sorry?
I joined a bit late, sorry, sir. Apologies if this question has been answered earlier.
Gulshan, I'm unable to hear exactly what exactly is Devang saying?
Yeah, I'm asking the utilization levels for next year and early trends on the pricing for electrodes.
As a year, next year we expect the capacity utilizations at 80%. This is what I said in my opening remarks also, I think answer to some other person, 80%. And we expect the price to be firming up from April to June quarter.
Right, sir. And this needle coke inventory of high cost, that will be utilized by Q4, and we will not have anything in next year. Is the understanding correct?
There'll be still a little bit of quantity left, which will blend with the new arrivals, and it will blend in April to June, but certainly after June there'll be hardly anything. But now already the inventories are quite at a lower level, when we go to the next year, we'll still have some quantity still left in the system because of our processing time of 2 months for electrodes. But that will blend with the arrivals of new coke at new prices.
Right, sir. Thank you, sir. All the best.
Thank you, Devang.
Thank you. Ladies and gentlemen, you may press star and one to ask the question. The next question is from the line of Ujjwal Agrawal from New Horizon Financial Group. Please go ahead.
Yeah. Namaste, sir. And my fellow participants have asked some really intelligent questions regarding the operations of the company, and you've answered them quite satisfyingly. I have 2 questions pertaining to the financials, actually.
Okay.
My first one is that we are carrying somewhere in the handle of 1,450 crores in cash right now, right?
Yeah. Yes.
Right. Do we have a policy regarding that we'll hold so much % of cash of the portfolio, something like that? Can you please tell me about that?
Yeah. We are having this internal policy of management of treasury. We have to invest only into a AAA papers and not to deteriorate our quality of the papers to go AA or AA minus like that way. We are more into the fixed deposits and corporate deposits again of AAA category, and we never compensate our compromise our returns with the quality of paper. So whatever the treasury that we have been carrying as on date is of a AAA category and yielding a return of 6.5% approximately.
6.5%.
Yeah.
Okay. Now, what I was going to suggest, it is a suggestion, you can look into it. What I was going to suggest is if regarding the interest rates being where they are, quite low, so if there is a possibility, could you please look into returning some of that back to the stockholders? That's just a suggestion. And now my second suggestion would be the stock price of the business is what I'm going to say is that it deters the smaller investors from coming into it. So can we look into splitting the stock into smaller chunks or something like that? That's also just a suggestion, and that's all from my side. Thank you.
Okay. Thank you.
Yeah.
Thank you very much. A reminder to all the participants, you may press star and one to ask the question. Ladies and gentlemen, you may press star and one to ask a question. Anyone who wishes to ask a question, you may press star and one. A final reminder to all the participants, you may press star and one to ask a question. As there are no further questions, I will now hand the conference over to the management for closing comments.
Yeah. Thank you, friends. Thank you very much for attending our call, and we hope to come back to you with next quarter results with more optimism, maybe better looking numbers. Thank you very much.